Hey everyone, Josh Martinez here, and welcome to this week's idea. So this week's idea is gold futures. Let's start with the daily time frame, and then we'll break it down to the 1 hour. All right, so what we have here on the daily time frame, drawing our trend lines backwards, is we have what appears to be a very, very strong bullish trend. And gold has been making higher highs and higher lows and bouncing bullish at, on, and around this blue line, which typically has been acting as our support, which is awesome. And so of this most recent bullish movement, is it one of those scenarios where this will go to all-time highs? Well, we'll yet to know, right? At the end of the day, this market could go to all-time highs, right? Anything can happen. I don't have a crystal ball, but one of the things that we like to do is we like to, number one, acknowledge where the market likes a U-turn, but also two, we like to bring in our Fibonacci's. And according to our Fibonacci sequence, we are expecting the market to at least hit the bullish target of price point 4910.6 because the market has like a 38250 retracement. So if we were to measure from where we currently are now to that price point target, it's like 2,158 ticks above. It's pretty big, right? So you have a daily sub up Fibonacci extension, which is price point 4910.6, and that is about 2,158 ticks above. Now, the question is, okay, where do you enter in? Where do you place stops? And so on and so forth. Well, I don't like to enter in off the daily time frame, but I want to take the target, which is 4910, and then I just want to bring it to a smaller time frame, such as like a 1 hour. And on my 1 hour time frame, I'm just going to notate where the market is expected to go, which is 4910.6. Okay, so 4910.6, and what I want to do is look to buy low, profit high along the way, and I also want to feel good about my entries. And so one of the ways I do that is I'm a big believer that the market U-turns at, on, and around the same price point. So I'll often draw up trend lines looking and matching where the lows form. And that makes me feel good and confident that, okay, we're somewhat around the angle that the market likes to move. So there's a buy zone, there's a sell zone. So currently right now, the plan is, okay, well, when or if the market comes near this blue level, not saying it will, but if it does, what we can do is bring in what's called like a counter trend line break. And when or if the market breaks and closes above that counter trend line, we can try to look to go long and take advantage of this rally. The counter trend line break is exactly the way it sounds. It is a trend line that counters the direction that we think the market's going to go. So if the market is above the blue level, the buyers are in control, and this most recent market movement is more like a short-term retracement. This short-term retracement move is expected to end, and a rally is expected to begin as long as the market stays above the bottom level. So this week's idea is to look for counter trend line breaks bullish towards the daily up sub Fibonacci of 4910.6. Stops can go in the opposite zones, right? And then just look for good risk management trades. A lot of people don't like to hold trades overnight in futures because the margins change. And so one of the things you could do is you go to like a 5-minute time frame, and wonder if the market gets into the buy zone. On your 5-minute time frame, apply your favorite entry strategy, but much focusing in on 4910.6 to be the target. Now, if you go to my TradingView profile page, so on TradingView charting software, they do allow people like you and myself to have a profile where we can post ideas. I went ahead and posted this idea on gold futures. And so your 1 hour time frame Fibonacci show like a 3,627 tick rally opportunity. Just keep in mind that the daily does have a sub extension at 4910.6 for a little bit of more of like an early profit grab. All right, everyone, this concludes this week's idea. My name is Josh Martinez. I really appreciate your opportunity. Please remember there is risk involved in trading. You should never invest money that you cannot afford to lose. Always keep risk management in mind. Understand that we are not CTAs, which stands for Commodity Trading Advisors, and what that means is What I share with you is research. What you do with this information is completely up to you. I am not a money manager. I'm not a financial advisor. I'm not an introducing broker. I do not trade for people, and I don't tell people to enter in or exit the markets, and I do not provide customized investment advice. Everybody receives the same information. What you do with that information is up to you. Past performance is not indicative of future returns, and what that means is that there's no guarantees of a positive outcome. It doesn't matter the research that we do. It doesn't matter the track record we have. It doesn't matter the resources that have available to us. There's risk involved in every single trade, and you need to be aware of the risk involved. Look at us like a newspaper. We'll share with you this information, walk you through ideas, explain the reasons, but what you do with this information is completely up to you. All right, everyone, this concludes this week's idea. My name is Josh Martinez, and we'll see you next time.